still watching Business Morning live on Channels Television. Now to our next conversation. We saw Fitch ratings there downgraded the long-term issuer default ratings of 7 Nigerian banks and 2 bank holding companies to B- from B. The outlooks are stable. But let's talk to Damilola Lukman now, a banking sector analyst at Chapel Hill Denham. Join us via Zoom. Great to have you on the program. Hello, Damilola.
Yeah, good to have me, Ladi.
Fantastic. If you can hear me, what factors normally lead to, these kind of downgrades?
Yeah, for this specific downgrade, Fitch had mentioned that the downgrade was on the back of the downgrade of Nigeria's sovereign rating, which was also downgraded from B to B minus, as the case most times is most corporate in a particular country, usually have maybe a rating, somewhat similar to sovereign, particularly for Nigerian banks, because of their exposure to the sovereign. Most banks hold treasury bill and bond instruments, which are issued by the sovereign. And also in terms of the cash reserve ratio as well, the cash reserve ratio is pegged at about the 2.5%, but we've seen, most banks, overshoot that. So because of their exposure to both the Apex banks in terms of cash reserve rating, and also their exposure in terms of holding bonds and NTB instruments, Fitch just felt that, they have a close relationship with the sovereign, and whatever affect the sovereign will most likely affect, these banks and the downgrade. They also measured the operating environment as well. Fitch, forecast that Nigeria's economic growth in 2023 will be 3.1%, which is largely impressive. But they also alluded to the inflationary concerns, also paucity of FX, paucity of foreign investor flows into the economy, and also the FX illiquidity as well as major factors, underpinning the downgrade of those banks. So it's both exposure, to sovereign and also the tough operating environment.
All right, we got that information there. The CBN issued new guidelines for getting a bank license for new and pending applications. Looks like securing a bank license is going to get more difficult.
Yes, it is. Most likely will get more difficult, on the back of the new guidelines. But I think the guideline is a cost for share, as the guidelines seeks to tighten the loose end, particularly around fraud, risk, exposures to fraud, around terrorism funding, and also proliferation funding as well. So this is CBN just ensuring that Nigerian banking system is ready to ward off attacks from fraud, from terrorism and whatnot. So I think it's a welcome development, and it's good it's happening at this time.
We also got information from the World Bank saying that financial flows to Nigeria and other sub-Saharan African countries is slowing down, at this time. What would you say is responsible for this?
Year 2022 has been laced with elevated interest rate environment, both in the developed markets and also in the developing markets as well. So what we've seen is massive outflows of funds or foreign portfolio investment, from sub-Saharan markets to safer havens, which at the moment, offer very attractive yield, also on the back of the elevated interest rate environment over there. And if you also take into cognizance as well the tough operating environment as well, I think most investors are just comfortable, plowing back their funds to the so-called safer havens, in the developed market, and they are just reducing their exposure to the interest rate risk currently obtainable, in sub-Saharan markets, and also the pass-through effect of the monetary tightening, on economic growth, in most of these sub-Saharan markets as well. And maybe going into 2023, if we see maybe a loosening monetary policy and a better macroeconomic environment, in most sub-Saharan markets, then we can start to see an increase in foreign portfolio flows into this market.
All right. Still looking at the Fitch downgrades there, how do you see this impacting the share price, of these financial services stocks?
For me, I think the share price will be a bit muted as most investors, have priced in, some of this risk into the share price of this company. Currently, most banks, are trading very close to their year-to-date lows, which means, investors are pretty much pricing, some of this risk and some of this sentiment, into the pricing. So I think markets will still continue to trade sideways, and we won't see any significant reaction, to this news in the share price of most tier one Nigerian banks.
All right, we'll be watching out for all of that. Thank you so much. That was Damilola Lukmono there, banking sector analyst with Chapel Hill Denham. Thank you so much.
Thank you for having me, Ladi.